Well, in today's business report, let's see how the markets responded to latest jobs data, the flash crash in the pound and institutional investments in Africa. Africa 54's business correspondent Jill Malandrino reporting from the NASDAQ in New York. How's the details?
Good afternoon. I'm Jill Malandrino from the NASDAQ market site. U.S. stocks opened sort of flat this morning, just up about 0.3%. This was following the all-important jobs report, which came in at 156,000 jobs versus consensus of 169,000. So a little bit of a disappointment in the headline number. All of this was overshadowed by the stunning move in the British pound around 8 p.m. last night, Eastern time, as it plunged as much as 6.1% in early Asian trading. This was the biggest decline since the one day after UK's Brexit referendum result was announced to a fresh 31-year low. Now, traders speculated the flash crash may have been sparked by a human error or what's called a fat finger in the trading world. On top of this, algorithms were adding to selling pressure at a time of the day when liquidity is relatively low. So that's why the moves were really exaggerated in the pound last night. Now, the overriding theme this week when we turn to business news on the continent was institutional investment. On Wednesday, we reported that Standard Bank is trying to position itself as the go-to brand for commercial banking in West Africa. While challenges like inflation, fiscal deficits, rising exchange rates and depreciation, as well as volatilities and uncertainties as a result of rising public debts still exist, efforts to reverse that are slowly being made. Looking to the future and what's working now, drivers of growth include agriculture and agro-processing, infrastructure development to support the rising growth, as well as oil and gas and mineral resources in general. Now, as always, the key to this is implementing stronger fiscal policies, transparency, and improved governance to keep the foreign direct investment flows coming in. Now, just out this morning, according to a new forecast from Jones Lang LaSalle, the prospects for sub-Saharan Africa's hotel industry remain positive, with a demand growth rate of 3 to 5% in the next 3 years. Quartz is reporting this. The ongoing spike in demand is due to the progression in tourism trends, demographic growth, besides a low supply and room provisions across the continent. Nearly $4 billion U.S. is projected to be invested in the hotel industry through 2018. Overall regional growth shows geographic diversity, with Côte d'Ivoire, Tanzania, and Senegal registering the most progress between 2016 through 2018. Long-term investor interest is also growing in cities like Kampala and Accra, while falling just a tad in Lagos, Maputo, and Kinshasa. From the NASDAQ market site in Times Square, New York, I'm Jill Malandrino for Africa 54.